Time is the most valuable resource, and the earlier you start doing something you like, the better it's gonna be. If you in your teenage years already realize that you're attracted to investment and you want to try yourself in it, you shouldn't wait with it. You can start investing now, and till the 30, you'll have a decent passive income. In this video, I will talk in detail about how to start investing as the teenager. I will give you a step-by-step plan on how to start doing it. Be sure to watch this video to the end. First, a small disclaimer. This video is not financial advice. It is important to realize that investing involves high risk and you must be prepared for potential losses. Never invest more than you can afford to lose, and always approach investing with caution and awareness. The earlier you start investing, the more time and money you have to grow. This advantage of starting early with younger investors is amplified by the power of compound interest. When you reinvest your earnings with the interest for additional profit, the value of your account can increase significantly. This makes investing even more rewarding when time is on your side. How do you start investing as the teenager? I will provide you with the 7 basic steps. The first step of teen investors is to learn the basics of stock investing. Without understanding the fundamentals of investing, there is a big risk of quickly losing all that you got in a profit. The problem is that many resources designed for beginning investors are not appropriate for teens. These materials are often written in a complex language that is difficult to understand. However, there are many free resources available for learning the basics of investing. Let's start with the YouTube channels. Andrei Zik YouTube channel. This is a useful YouTube resource that explains basic investing and economics concepts for beginning investors. YouTube channel Token. We often release videos about investing, stocks, and finance on our channel. Now, let's talk about websites. The investor.go website provides educational materials for teen investors covering the topics of stocks, ETFs, and other types of investments. The next website is called Investopedia. This is an educational website that covers both beginning and advanced levels of investing. The website offers an excellent dictionary for all the basic investment terms that are clearly defined and followed by the related articles. Investopedia has been a trusted source of information about investing for many years now. The third website is called Wall Street Survivor. This website has an educational section with lessons on the stock market. The second step is choosing the right investments for teens. Investments for teens can range from stocks and exchange traders funds to some non-risky assets like government bonds. Look for stocks that you are interested in. That way, you will be more motivated to understand how the stock market works. If you love sports, you can invest in Nike or Vans. Do you dining out on a daily basis? You have the opportunity to buy shares of Starbucks and McDonald's. Note that this is not financial advice, just examples of companies of interest. Choosing stocks based on the brand recognition may not always be the best strategy for making investment decisions. Later, as you gain experience in investing, you can do more in-depth analysis to see which stocks are really worth your money. You want to invest in assets that are less risky than investing in a few individual stocks? Then you should consider investing in the index-based, exchange-traded funds. These are also called ETFs. These funds are investments in a diversified groups of companies and are traded on the stock exchange just like stocks. In simple words, Buying ETFs, you have a lot of shares of different companies. One of the safest investment a teen investor can make is to buy the US saving bonds. These bonds are loans that US citizens make to the government. You should consider these bonds as a way to save money rather than a way to grow capital through price increases, as with stocks and ETFs. Step 3. Find out what the companies do and get their financial data. Before investing in company, it is a good idea to get a copy of that company's annual report. This is a document that most publicly traded companies use to provide corporate information to their shareholders each year. It is usually a report on the current state of affairs of the company, including financial data, results of operations, plans for new products, and the like. To get any company's annual report, type the company's name into Google and add annual report to your search phrase. The search will likely to take you to the investor section of the company's website, where annual reports for the past few years will be available. You should always know detailed information about the company's financial performance. There are many different performance measures available. Fortunately, you don't need to calculate them on your own. Many financial websites provide the information you need. Here are 3 websites, for example, to get data on any company: Stock Analysis, Market Watch, and Morningstar. Step 4. Experiment with training portfolios. Creating a learning trading portfolio is the great way to overcome the fear of taking your first step into investing. There are several websites that will help you to invest using virtual money. That is, you will simply practice investing without losing real money. Here are 3 websites for creating training trading portfolios: Mock Portfolios, Market Watch, and Wall Street Survivor. The 5th step is to choose the right trusted brokerage account for teens. Regardless of which investments are selected, a teenager under the age of 18 cannot handle investments of his own. The teen will need the involvement of an adult to open the Guardian brokerage account or to authorize the purchase of a certain assets. Find out the legal age of investment in your country or your state. Some countries and states define minors as anyone under the age of 18, while others define minors as anyone under the age of 21. Also, find out what documents you need to open a brokerage account. In some countries, you may only need a notarized authorization from one of your parents. However, in other countries, the procedure may be more complicated. 6th step. Avoid investment scams. If someone promises you huge profits in a short time, it is better to postpone this idea. High profits in any investment project usually comes with a lot of risks. If someone tells you that they want to take your money and guarantee a steady return of, let's say 12% every year, it's most likely that this person is skipping the part about risks. Let's talk about the signs that should alert investors when receiving an investing offer. The first is an unusual high guaranteed return. If a little-known company or person tells you that unusually high returns are guaranteed, be careful. The second sign is the company that just a few people have heard of. If you never heard of a company, broker, or advisor, do a little research before you invest. And if a financial firm that seems to have a good reputation only lists a post office box as its address, it is best to check it out properly before sending your money. The third sign that should alert you is urgent appeal in investing right now. Scammers usually try to create a sense of urgency by making you think that if you don't act immediately, you will miss out on a good opportunity. If you are being pushed to invest urgently by phrases like "once in a lifetime" or "too good to be true," opportunity that can be passed up, just say no. The fourth sign is an investment that is difficult to understand. Scammers often use a lot of complicated words and technical terms to make an impression. If you don't understand the asset they are talking about, don't buy it. If the seller can't explain the concept clearly enough for you to understand it, it's not your fault. Now, let's talk about cryptocurrency separately. Crypto is very popular right now, and you've probably thought about investing in it. Before diving into the world of cryptocurrency, you need to understand the basics of investing in volatile market. Cryptocurrency is an investment that teenagers and young investors should probably refrain for now. The reason is simple. Cryptocurrencies are extremely volatile, making them a risky asset. Take Bitcoin, for example, the most famous cryptocurrency. Its value has fluctuated quite significantly in recent years. In November 2021, one Bitcoin was worth more than $60,000. However, by June 2022, its price had dropped to about $20,000. This is a drop of about 70% in just 7 months. Before considering any investment in cryptocurrency, be sure to thoroughly research the issue and realize all the risks. Remember that all high potential returns always come with an equally high risks. And in the case of cryptocurrency, this risk is often multiplied many times over. Proceed with caution and always consider safer and more stable investment option as you gain knowledge and experience. However, there are risk-free earning opportunities in the world of cryptocurrency. We already have a video on this topic on our channel, so go over and watch it. You should realize the benefits on investing pretty early, but you should also understand the risks involved. The main risk of investing is the possibility of losing some or even all your money. Different types of investments have different levels of risk, and it's you to decide how risky it should be. In general, the more risk on investment, the greater its potential for high returns. Understanding this relationship is crucial for all investors, young or old alike. However, being young has its advantages. Because young investors can stay in the market longer, they can afford to take greater risks, which increases potential returns. When the inevitable market downturn comes, young investors have time to wait for market to recover. However, regardless of age, it is important to find your own investment style and make sure that the level of risk you face is acceptable to you. We have even more videos about cryptocurrency, finance, and making money on our channel, so go on over and take a look at it. I hope you found it useful, and thank you for watching. Give us a like and subscribe. The Token team has been with you, and we'll see you in the next video.